Thank you so much, ladies and gentlemen, and welcome again to our financial intelligence classes. And in our today's video, I want us to talk about investment red flags. Now, investment red flags. Ladies and gentlemen, you well know that as much as we talk about investments, there are some things that if you identify in an investment, you're supposed to run away. You run away. Give me a, you're supposed to run away from them, because if you put your money there, then most likely you're going to lose your money. And that's why I've created this video specifically to address some of the red flags that you're supposed to identify in an investment, and they are not supposed to be there, because an investment is something that is supposed to flow on its own without being forced to do anything. And therefore, ladies and gentlemen, I'm going to give you 7 well-known investment red flags that you're supposed to check even before you decide to put your money in that particular investment. And that's why, ladies and gentlemen, this is another reason that you should stay subscribed in this particular channel. If you're seeing me for the first time, my name is John Mweri. I'm a professional accountant with Xfinop Accountancy and Insurance Consultancy. All right, and you have been following my videos and seeing them, then you know what you normally do. Now, let's get to the business of the day. Investment red flags. What are these investment red flags that you're supposed to check even before you put your money in that particular investment? Now, make sure you watch this video up to the end, because here is where the content is. All right. All right, ladies and gentlemen, let me just put this title of mine up there so that I can have some more space. Investment red flags. Investment red flags. Now, on my point number 1, ladies and gentlemen, on investment red flags, I have prepared some notes with me here so that I may not forget on what I've prepared for you. On my point number 1 is unrealistic returns. Unrealistic returns. Unrealistic returns. Now, ladies and gentlemen, most genuine investments are going to have realistic returns. Let me put it on here. Most genuine investments are going to have realistic returns. For example, what are some of the realistic returns that we're talking about? Now, in most cases, realistic returns are going to be annual returns. For example, let's talk about 12% per annum. All right. Let's talk about 13% per annum. Let's talk about 14% per annum. Let's talk about 15%, 16%, 17% per annum. Now, there are some returns that if you get them online, they are going to be very much unrealistic, and it should click in your mind that this return is not a genuine one. Because if you look at this particular 12%, this is someone who is guaranteeing you 1% monthly. All right. Now, if you divide this one by 30 days, how much is that in terms of days? If you divide 1 divided by 30 days, that is 0.033. That is 0.033 daily. Now, that one is a good return. That means if you were to invest 100,000 in this kind of a return, then it means this could be 0.033 times 100,000. So daily, this amount could be giving you 0.033 times 100 could be giving you 3.3 shillings. 3.3 shillings. Now, that means this particular investor or this particular fund manager that you have given 100,000 that belongs to you is going to invest your money somewhere else that he or she gets a little bit higher return than this. For example, gets 15% and gives you 12%. So after that investment, he or she is left with approximately 3%. That is a profit that person has made. All right. Now, but in most cases, if you get an investment that you guys are being promised, let me do away with this. If you get an investment that you guys are being promised, for example, 20% per day, per day. Now, there is an investment that you are being promised 20% per day. Now, for example, just to give you a very relevant example is CBEX. CBEX, you know CBEX, the one that scammed people, and a lot of people, especially a lot of Nigerians, lost their money. Someone came and told you that if you put your money in this platform, then at the end of the month, we are going to give you double your money. For example, if you put 1 million at the end of the month, or probably at the end of the investment period, you are going to get double your money. And then they tell you to deposit and deposit. And some people went on taking loans, going to deposit their money there just to be scammed at the end of it all. So ladies and gentlemen, it's very dangerous. There is no way someone is going to give you a return of 20% per day. Then it means if it's 20% per day, if you multiply 20% times 30 days, this one could be, you won't tell me that this is 600% monthly. Now, before you did this investment, did you see this one is a very unrealistic return? 600% monthly. There is something fishy here. This person is actually not, this person, just to tell you the truth, is actually not investing this money anywhere. This person is collecting deposits, paying some and others who invest. You know, whatever you are going to invest, if you decide to put 1 million in that platform, that person is going to take that 1 million and pay for those who are withdrawing. But because everybody wants to invest in that particular investment and doesn't want to withdraw, then this person is going to have a lot of deposits coming in. And of course, there is a way, you have computerized the program. They are going to show them that how their money is going up and so on and so on. But in real sense, there is no kind of an investment that is going on. Now, if somebody decides just to gain the trust of these people, you know, they are going to pay for the first 1 month, 2 months, 3 months, and then they have a limit whereby if people now come, hey, this fund manager is actually paying, let me put more money here. Oh, I had put 1 million. I think I can take a loan, probably add 2 million, so that at the end of 30 months, I'll have 4 million. You see, you are depositing and depositing and depositing. Someone who invested 50,000 and now wants to withdraw it as 100,000. Actually, they are going to get that amount. But remember, you have invested a very huge amount, and therefore you want it to be 4 million or 5 million and so on and so on. So the money that you are depositing actually is the one paying someone else. Now, when they see that people has put more money, and probably someone wants to withdraw, that's where now they start putting limits and they dismantle everything because they have reached a level where they wanted. So ladies and gentlemen, be careful on how the pyramid schemes work, especially when it comes to unrealistic returns. And this one is very common, and we have a lot of pyramid schemes that even right now as we talk, leave alone CBEX, that the one that washed people purely. There are a lot of pyramid schemes right now, even as we talk, another one like CBEX that people are still investing. And I want to tell you, ladies and gentlemen, if you are an investment scheme or a pyramid scheme that is offering you not, let's say in this particular investment, giving you more than 18% per annum. If you are in an investment that is giving you more than 18% per annum, then you are in the wrong investment, because I cannot guarantee the safety of your money. We had money market funds that were giving you probably 18%, but that was when the rate of treasury bill was high up there. Now, if you look at Etika Money Market Fund, one of the most trusted fund manager, as we know in Kenya, right now is at around 10.5%, actually almost going below 9%. Why? Because they are investing their money. They are not paying you out of deposits. They are paying you out of the profits that they have made. So if you find a fund manager who is going to pay out of the deposit that people have made, that one is a wrong investment. And in most cases, very soon, then that investment is going to be to be dismantled. So ladies and gentlemen, be very careful on unrealistic returns. Do not be deceived by the returns that you get from an investment. A genuine return is a per annum return, not a per month return. If it has to be per month, then it has to be very small, depending on the market conditions. All right, so ladies and gentlemen, that is the first one. If I move to my next point here, ladies and gentlemen, pressure to act quickly. This one is very common. Pressure to act quickly. Pressure to act quickly. You find someone telling you, oh, this investment we have given you, for example, they are going to use words like this, limited offer, you see, limited offer. They are going to use clauses like limited offer. So these offers expires in 30 days. So someone is triggering you so that if you have some money that you have kept for yourself, and someone has promised you 30% per day or 30% per month. For example, if you are going to multiply, that is 130, that divide by 100 times, let's say you decide to invest 100,000. So that is 130,000. Now, if you decided to invest 100,000, it means that the month you will have 130,000. Now, in most cases, in a genuine investment, if you decide to invest 100,000, this you are going to have a return of 12% per annum. But remember here, you're having a return of 30% per month. That one is a very unrealistic return, because where is this person investing to get? Then it means this fund manager, if he was to pay this way, he or she is investing in an investment whereby he is earning more than 30% per month. Which kind of an investment is that? Have you done research to actually find out if there is that kind of an investment? There is no that kind. Even commercial papers that we all know that they are going to have high returns, and they are normally offered to corporate organizations and so on and so on. They are not going to have this kind of returns. So ladies and gentlemen, 30%, and that's where you see now they are going to give you this kind of a return, and then they tell you they give you pressure to act quickly, and then they tell you this offer is limited in 30 days, then it elapses. So wewe na maharaka zako, you dive into the investment, you put your 1 million, your 500,000, and then after 30 days, actually they don't even end 30 days. You are all washed, you are all clean, you are clean, your account is clean, washed. Ladies and gentlemen, pressure to act quickly, beware. A genuine investor is not, or a genuine fund manager is not going to pressure you with your money. They are going to tell you, look at money market funds. It's for your own free will. You either decide to join or not. They're not going to come here, you flout, with a lot of, oh, if you invest here, you have to act quickly, so on and so on. So ladies and gentlemen, fund managers are not going to force you to act or to invest your money. All right, genuine ones. But those who has other intentions, of course, they are going to come up with they are going to make a lot of noise in the market so that you can put their money there. All right. Now, on my point number 3, ladies and gentlemen, unregistered sellers or platforms. Unregistered sellers stroke platforms. Now, each and every investment account must be registered with regulatory authorities. For example, money market funds are regulated by Capital Markets Authority. Any other investment scheme that you know is regulated by Capital Markets Authority in Kenya. And ladies and gentlemen, before you put your money in any kind of an investment, first of all, check if it is regulated by Capital Markets Authority. Did you know that even the real estate investment trusts, those companies that deal with that kind of an investment, did you know that they are regulated by Capital Market Authority? The fund managers, the money market funds, are regulated by Capital Markets Authority. We have the rates, we have the fund managers, we have other kinds of investment that you can put. You can also check them on the Capital Markets Authority. They are regulated there. So, ladies and gentlemen, if it is unknown that this investment is not regulated by any fund manager, and you have not done that research to actually find out whether that particular investment is regulated by a fund manager, then you are in the wrong investment, or if that information is unknown, because you are supposed to know, is this investment platform regulated anywhere by the government or not? Even if it's an investment from outside, not with a local investment like money market funds, if it's from outside countries, check whether they are regulated by their governments. If they are not regulated, for example, if you check oil, CBEX was not regulated by any government. Therefore, it was fishy from the beginning. If someone was clever enough, you could identify that that investment is a wrong investment. So, ladies and gentlemen, a good and a genuine investment must be regulated. And did you know what? Good investments and regulated investments are going to have genuine returns. I don't know, the government is going to regulate something that have 30% or 100% investment after 100% more profits at the end of the investment period, because even the government itself, if wanted to invest their money, where can you get such kind of money? All right, so ladies and gentlemen, registered sellers of platforms is another red flag when it comes to investment. So let me go to my point number 4: complex or secretive strategies. Complex or secretive strategies. Now, some ladies and gentlemen, some fund managers or those people who are going to come up with these investment schemes, they are going to make it complicated for you. They are going to make it so hard for you so that you may not understand what is going on here. But the real deal here is they want to take your money away from you, but they are going to make the whole process complex. Tell you do this and do that. When you try to figure out what's really going on here, then you cannot understand. Now, let me give you a scenario, ladies and gentlemen. If you look at money market funds, just to give you an example of money market funds, they are going to provide you with what we call a fact sheet. What is a fact sheet? A fact sheet is a document that normally shows you how your money is going to be invested. For example, they are going to tell you that 50 billion has been invested in cash and call deposits. This one has been put in commercial papers. This one has been put in treasury bills, and so on and so on. They have distributed, or they have shown you a breakdown on how they have invested your money. But you are supposed to, if you find that some of the investment schemes have not genuinely shown you how they have invested, they are just telling you deposit your money, and then at the end of the month you are going to get your money doubled, right? But they have not provided the necessary documents that are supposed to show you. There are no reports, all right? There are no prospectuses. There are nothing. There is just nothing. That one is, it's not a clean deal. So, ladies and gentlemen, complex or secretive strategy. If you even go to online and probably try to find more information about these particular people, you are probably not going to find any information that can help you. Because why? There is no reports. There is no, actually, those people who are behind the screen, you cannot see them. So, ladies and gentlemen, complex or secretive strategies, of course, you're supposed to check that. Do a research on an investment before you put your money there, to see actually whether you can see documents related to that particular investment. Now, on my point number 5, ladies and gentlemen, is Ponzi or pyramid structure. Ponzi or pyramid structure. Ponzi or a pyramid structure. And I think I have mentioned this when I was talking about unrealistic returns, whereby a person who is going to promise you a return of 30% per day or 30% per month, that one is unrealistic return. And I told you there is no genuine investment whereby that person who has there is no genuine investment whereby that person who has promised you 30% per month, there is no genuine investment that person is investing on, because actually there is no such kind of an investment, not unless you decide to do farming. And when you decide to do farming and get that kind of an investment, it's going to take you some time for you to pay back the investors their money. But when someone tells you that I'm going to give you 30% per day 100% after at the end of the month, that one is unrealistic. The question is, where are they getting that money? Where are they investing so that they can get that kind of a return? Who are they giving their money so that they can get that kind of a return? Did you ask yourself that particular question? Do that even kind of a return exist, whereby that you are going to put 100K and then at the end of the month you have yourself 200,000? Does it even exist? Then I think that is where the government could go. They put their billions of dollars there, and then at the end of the year, at the end of the month, then they have trillions of dollars. The money has doubled, all right? Then I think everybody could be running towards that particular side. But what they normally do is Ponzi or pyramid structure, whereby, let me just draw something small here. We have person one here. We have person one. This person brings several people. This person is going to refer person two, person three, person four. You see, this is a pyramid scheme. This is the first person. This person, if refers another person to that particular company or that particular, fund manager in quotes, refers this person here, the second person, this person is promised some commissions out of the referrals, and they are going to insist on this because they want a lot of people on board so that they can pay the investors who are there at the beginning. So this person brings this person one, person two, person three. Then this particular person here, when he gets in, brings another three people, another three people here, another three people here, and therefore you see money is still coming in to this fund manager in quotes. Of course, there is another person here, another person. You see, the first person brought 1, 2, 3. The third person, these three people that were, this one is level 2, level 3, level 2, level 3. So this is the first person, brings 3 people. The 3 people that have been brought by the first person brings another 1, 2, 3, 4, 5, 6, 7, 8, 9. You see how the network is growing. And remember, this is only one person. What about we have like 1,000 people bringing people in on board? So you can imagine the amount of money that those people collect. And therefore, out of deposits, they don't pay. When you talk about Ponzi or pyramid structure, is whereby they don't pay out of the profits that they have made. No, they pay out of the deposits that people have made. Those people that are being referred, because you see, if I put 50,000 right now, of course I'm going to wait at the end of the month so that I can get my 100K. And actually, if that 100K is there, I'm not going to withdraw that money. I'm going to leave it there so that I can multiply to 200K, to 300K. Then by the time you are realizing kimeumana, then you are all washed clean. All right, ladies and gentlemen, that is how Ponzi or pyramid structure is going to work. So you have to differentiate between an investment or a pyramid structure. You are not there to gain any profits. There are no profits. There is nothing. It's just a Ponzi or a pyramid scheme. There is no profits. What you are being done here, it's psychological. Like they are telling you, do this, bring more people, you will have more returns, do what, commissions. Ladies and gentlemen, can you be very careful? Now, on my point number 6, my second last point is missing or on inconsistent paperwork. Means missing or inconsistent paperwork. Now, missing or inconsistent paperwork. And I think I have mentioned about this, whereby I have said that if there is no documentaries to show how this particular investment work. For example, I have talked about money market fund. Even you go to online right now and type in Etika money market fund, Avocap asset managers, some people like Old Mutual investment asset managers, Jubilee asset management, you are going to see that they have provided a fact sheet on how they normally do their investment. They have given you the custodians, the management fee. They have stipulated everything there. So therefore, they have shown you everything on how they normally do their things. They have given you the breakdown that for example, if they have like 9 billion assets under management, they have told you that 2 billion has gone to treasury bills, then 5 billion has gone to commercial papers, this one has gone to this one has gone to this. So they have, and then they have given you, they normally give reports monthly. They are going to give reports monthly. Reports of January 2025, reports of February 2025, reports of March, Evo. So they are going to give you monthly reports on how we are. If there is something that have changed in the market, if there is something that made the returns go down, they are going to tell you why the returns went down. For example, we know the returns of money market fund has gone down because of the going down of the treasury bills, or probably the Central Bank of Kenya cutting down the lending rates. All right. So, ladies and gentlemen, missing or inconsistent paperwork. If you look at those schemes that have washed people clean or they have scammed people, it's because if you look at, there is no paperwork, there is no documentaries, there is no prospectus, there is no financial reports at the end of the month. Now, who can provide the financial reports of CBEX? There is nothing. It was just something that was put there online, scammed people, and then you people just went on and believed. And as we talk right now, there is another one that is going, not even one. There are so many of them, and people are still putting their money there. I don't know why people want to risk. You know, greed can take you to a deep hole whereby you lose a lot of money and you start blaming yourself for that. So, ladies and gentlemen, that was my point number 6, missing or inconsistent paperwork. If there is no paperwork, then you run away from it. All right. My last point, number 7, is promoters flouting wealth. Oh my Jesus. Promoters flouting wealth. Now, if you see people coming online, this one is very common in social media. People introduce a certain investment, in quotes, because those are not investments actually. People come up with a certain investment, and you are going to see a lot of some ninjas there trying to flout themselves with flashy cars, you know, very expensive lifestyle, and then they are going to tell you, they are going to bring those people on board and interview them online. And I have, for example, let me use CBEX. I have been investing in CBEX for the last 3 months. You can see this is what CBEX has done for me. I bought my first car with this particular investment, in quotes. You know, I bought my house with this particular investment. This was me before CBEX, and this is me after CBEX. You see, those kind of things, they are trying to convince you that if you put your money here, this is what's gonna happen. But remember, it's opposite of that. What's gonna happen is that you are going to be washed clean. You know, so ladies and gentlemen, motion ni real, but you have to be very careful with this. You can see even the forex guys, those who come up, who comes online, social media, TikTok, you know, with some very expensive cars, and in most cases, okay, I am not saying that forex is scam, but in most cases, you are going to find that the real forex people don't talk. They keep quiet and they work on their strategies, and they are going to earn their money, whichever money they earn, and then they move on with life. But there are some few ninjas here making a lot of noise, and you know, these one and these ones do what people cannot even talk because it's their space to talk. So be very careful about that. So, ladies and gentlemen, promoters promoting flouting wealth, or promoters floating wealth, is where people are going to show you luxurious life, things that they own, cars that they own, buildings that they own, because of a certain investment they claim to be an investment, but in real sense, it's not an investment, it's a scam. So, ladies and gentlemen, if you see these ones in an investment, then run away from it. Do not even dare put your money there. Even if you are tempted, just go and find something else to do with your money. So, ladies and gentlemen, unrealistic returns, pressure to act quickly, unregistered sellers or platforms, complex or secretive strategies, Ponzi or pyramid structure, missing or inconsistent paperwork in that investment, promoters flaunting wealth. Those are 7 main red flags in an investment that you're supposed to see and run away from them. All right. Never say that you are never informed, because we normally say information is power, or knowledge is power. Once you know this, then I know you're not supposed to be having any greed of money. All right. Because in most cases, what will happen is you are going to lose your fortune. So ladies and gentlemen, thank you so much for watching this video. That was my time. Remember, my name is John, professional accountant with Xfinop Accountancy and Insurance Consultancy. Don't forget to subscribe. Don't forget to comment. Don't forget to share this video. And also, don't forget to hit the notification bell so that anytime I upload a video, YouTube is going to notify you that Sir John Mweri has uploaded a new video. So ladies and gentlemen, make sure that you share this video to your friends to get them educated about investments, and also that we can have our society educated. Thank you. That was my time. See you on the next.